Good morning everybody. Today we are going to learn about accounting concepts and conventions. Now what are accounting concepts and conventions? Accounting concepts and conventions are generally accepted rules and guidelines that are to be followed by each and every accountant. If we are not following these rules and regulations, we will be getting into frauds and the actual result of accountancy will never come through. Now we will start with the first concept of accountancy, that is business entity concept. Now what is business entity concept? Now what is business entity concept? Business entity concept is also called separate legal entity. Separate legal entity. Now what is separate legal entity, or what does it state? Separate legal entity or business entity states that the owner and the business are two separate people according to law, are two separate entities. Now entity here means a thing which is having its own existence. Now owner and the business are having different existence according to the business. Now what it is saying, the owner and the business are two separate existence entity. Any private and personal incomes and expenses of the owner should not be treated as incomes of the expenses and business. Now we can come with some accounting jargons out here. Owner is investing money in the business. Now owner gives money to the business. Now this is called capital. What is capital? Owner's investment in business. The first investment by the owner to the business is called capital. Now it is quite possible that the business is also giving something to the owner, or the owner is withdrawing something from the business. Now this is called drawings. Now what are we trying to learn from this separate legal entity, or what are the examples of separate legal entity? Now for example, the owner has taken 3 rooms in a flat. The owner has taken 3 rooms in a flat, and 2 rooms he is using for the business purpose, and 1 room he is using for his own self-residential purpose. Now from accounting perspective, the owner and the business are two separate people, and that's why we will only take into consideration the rent of the 2 rooms that is taken as business purpose. The place where the owner is residing, it is his personal expenses, and the business will not pay his personal expenses. Some other examples we can take for a separate legal entity. For example, the owner has been sent, or the owner is going on a business tour. Now when we are sending the owner on the business tour, people can ask us that it is the owner's business and he is going for the business tour, and the owner is taking his family along with him. Now what we will come to know from this place is, when the owner comes back from the tour, he is debiting all the personal expenses of the family in the business expense. But according to separate legal entity, this is wrong. Why? Because the owner is the person who is associated with the business. It is not his family and friends which are associated with the business. All personal expenses will be treated as drawings, and they cannot be debited in the business account. They will be deducted from the capital which owner has paid to the business. Any form of cash or commodity drawings are treated as personal things of the owner, and they will be debited from the capital that owner has paid to the business. And this is treated as the first liability of the business. Now what is liability? Liability means any amount that the business has to pay to the owner or outsiders. Now since we treat the owner and the business as two separate people, it is the first liability of the business that the owner has to get back his money which he has given to the business in the form of capital. Other expenses or other things that we can take as examples are, now for example, the owner is having 2 credit cards with him. One credit card is related to the business and another credit card is related to the personal expenses of the owner, or it is in the personal name of the owner. Now while paying some expenses of the business, the owner uses the personal credit card. Now, this is again will be treated as extra money invested by the owner in the form of capital to the business, as he has used his own personal credit card. These are some of the examples which will clarify us that how business entity works. Now, in the recent past, we have come to see Vijay Mallya. Vijay Mallya is the owner of Kingfisher. Now, we have seen that Kingfisher has gone bankrupt, but according to business entity concept, has Vijay Mallya withdrawn the money, or has Vijay Mallya taken a loan from the bank? No, Kingfisher has taken the loan from the bank. Since Kingfisher Airlines cannot go to the bank, Vijay Mallya has signed on behalf of Kingfisher or on behalf of the shareholders. And as Vijay Mallya, the shareholders are also responsible then, because shareholders are also the owners of the business. The business entity concept has many things to be discussed in future, and it is a very vast phenomenon how to take it forward. The second concept of accountancy is money measurement concept. Now, what is money measurement? In accountancy, all transactions are measured in terms of money's worth of that particular country. If you see to the side, all transactions of the business are recorded in terms of money. It provides a common unit of measurement. Now, what is this common unit of measurement? It is generally the currency of that particular country. For example, in India, we will say 10,000 rupees, 1,000 rupees, 200 rupees. If we go to USA, we will say $5, $10. If we go to Japan, we will say 5 yen, 10 yen. Now, how to elaborate this point? It provides examples, market conditions, technological changes, and efficiency of management would not be disclosed in accounts. Now, how we can elaborate or simplify this example? Now, the owner of the business is coming and speaking to the staff of the organization in order to motivate them. And in this process, the sales of the organization grow. But this will not be recorded in the books, as the money measurement cannot be done for the motivation factor. Now, if we are bringing a person from outside who is coming and motivating, and we are paying that person, then we will treat it as money measurement. Or in other words, only ordering for materials is not a money measurement concept. No entries will be passed for it. Why? Because once you order, you are not receiving anything. Unless and until you are promising him to pay, or you have received the material, or you have sent the material and you have not received the payment, it cannot be recorded in your books. Any losses because of technological changes, market conditions, efficiency of management will not be recorded in your books. So these are some of the concepts and conventions of accountancy. As the class moves ahead, we will be dealing with much more concepts of accountancy. Thank you.